Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is December 16th, 2017, and this is my weekly trade review, where I review a NASDAQ morning trade, trading QQQ. I use the future also for as almost as an indicator for myself to help me make a decision on how I'm going to trade that opening, that 9:30 opening. I'm looking at a 5-minute candle in this particular strategy. Red candle we sell, green candle we buy. We look to lose no more than 5 points on this trade. We look to make 5 points or more on this trade. I have a couple of rules that I share right here, right now. Is a doji is a no trade. I define a doji as a dollar or less between open and close. And I also have another rule here that I always throw out there, that greater than or equal to 10 on that first 5-minute candle. That rule is in place because if I'm only trying to make 10 points and it's already moved 10 points, it can be hard to get 10 points within that first 15 to 20 minutes based a lot of times that I'm in this trade. This is only an opening trade. I have many other strategies. And this, as you're going to see this week, I didn't get to place one of these trades at all. But I did have other trades placed, and I actually ended up swinging this week, between this week and last week, really. And I was long, and I am still long the Qs right now. So, first of all, let you know, this is all for educational purposes only. Trading is risky. You can and you will lose money at trading. So check with your financial advisor, check with your significant other, see if trading is something that's actually suitable for you. This is all for educational purposes only. This is not a trade recommendation. This is just to show you things that we do here at Right Side Trading. All right, let me bring up the charts first of all. And let me see if I can bring them up. Boom, boom. And that was I'm going to look at that right now. Let's look at the big picture. The big picture. This is this week. This is Monday, Tuesday, Wednesday, Thursday, Friday. Monday, as you can see, was a good day. I'm looking at an hour time frame. I do use other time frames other than that 5-minute time frame. That 5-minute time frame is something that I share with you guys, and I'll looking at it with you guys. But me behind the scenes, and when I'm actually trading, I look at higher time frames to do some longer term type trades, and I'll keep me in the market a little bit longer and stuff when I'm doing my swing trades. Like I say, I'm actually still in the market now. I actually caught all this, which was a great thing. Had my target set on my option to get me out, and it actually missed me by a penny. One of the guys was actually sitting here, and he saw that, and I said, yeah, I would have took that exit if it would have gave it to me, but I'm glad it didn't get me out of the market. Now although I did mention to him, I am at that hope thing, and hoping this market doesn't just drop back down come Monday or come Sunday, and I could have got a better exit there, and then got back into the market again on Monday. But that's all part of trading. Let me just go on and jump to our thing. But I just wanted to show you this market has been going up. We did do a little pullback here, so when we started getting this action going back down, I am always looking. I'm looking at patterns in the market. We see a pattern right here, and I was in this market here not until like this day or this day though. With Monday, this is Friday, Thursday, Wednesday, Tuesday, Monday. Yeah, I didn't get in. I was already in the market. To be honest with you, I was already in the market and stuff. I added to my position here and here, and I did actually take some of my position off when we got back up to my zone that I identified, and I left a few contracts on because I said if we break through this zone, which I thought was possible, I didn't know if it was or not, or who was going to end up getting another one of these type things. So I did leave a few contracts on, and I'm still long. But I'm giving you all that because of what happened this week. And let me bring the presentation up, and you can see. Like I said, this is my weekly trade review. The day is December 16th. This is for the week of December 11th through December 15th. You can contact me directly, Solomon at RightSideTrading.com, if you would like to learn more about the different things that we do at Right Side Trading. This is why I went through all what I went through. This week was one of those greater than 10, no trades, doji, no trades. I did, like I said, was able to squeeze in a couple other trades on Monday and Tuesday on the upside, and ended up staying long after this downward trade. Most people know I don't trade the market down, but when it did dip down and actually ended up going back up a little bit, I stayed long. But now let's take a look at the charts and see how that actually look on the charts. Let me bring the charts back up. And let's go to Monday. Probably a little bit. I'm going to go through this a little fast. As you can see here on the future market, 66.76, greater than 10, no trade. But, this market had broke some highs. Get long, stay long. That's all I want to say on that. Again, on this day right here, this was the downward day. This was the downward day. And in the future market, in the future market, I look at this as an indicator. It's kind of strange. This is the 12th, as you can see, 12th, and this is the 12th also. And on my QQQ, I had this red candle down, which was kind of giving me a downward play over in the future market. And I'm looking at the same time. No, it's the wrong time frame. That's what we're looking at. That's why that looks like that. Let me change this time frame. That happens every now and then. And go back here. This day right here. This is Tuesday. And let's just do it like that. So now it matches up. I saw that. So what's going on there? So this was a downward day, and let me see, did it play out right here? Yeah, everything looks good there. So I knew, yeah, I was looking at it wrong. I don't know why I did that. It's kind of strange. But it was a trade down because I saw it on the option side here when I review it. And me, I didn't play it down. Me, I was still the big picture that the market is still up. So I'm looking for a place to get in the market, going long, and that's what I ended up doing this day right here. I was back long, probably right around here somewhere, and I stayed long. And I added to the position that I already had on. I know exactly that. I know that's what I did. So let's move on. On this day right here, again, let's back up a little bit where you can see that in the future market. Easy when that first, just getting you kind of used to seeing this. You can almost see 26.36.10. But if we look at that candle closely, you're looking at the low and you're looking at the high, 26.36.25, greater than 10, no trades. So you end up moving on to the next day. Because the thing is, it's going to give you some kind of chop, and you got to end up looking for your next best play. Is what you got to do. And I was already long, had a couple of positions long, so I ended up passing on that type of stuff. Next day, Thursday again, greater than 10, no trade. Again, as you can see over here, you end up getting some chops, and you find a position to go long, because if the market is in an uptrend, you trying to find to go long. Is what I ended up doing. Even though I'm around this supply area, that's just the way I am. If I'm playing a breakout, if I'm gonna play a breakout, I want to get in the bottom side of my identified supply area and playing it to the top of the supply area. Is the way I play these things. Move on. This day right here was Friday. Friday, I was completely out of the market already. Well, I was completely out of my two positions that I had on, and I was in my other position, carrying me on up, and I'm still long the Qs right now. Again, this was looked like it was a downward play. Let's back up a little bit over here. I had gone forward too far, and let's look at that first candle. First candle, 28, looked like 28 to 38 almost, close to 10. You're looking at it. You look at low 27.5, 37.5. That's 10. That's why I had to throw the equal sign in there. It's no trade. You're looking for that next best play when you have those type of candles. That's the whole thing. And then you always need to be looking for that next best play in the direction of the trend. Or if you have already identified a trend change, is what you're looking for. Again, that's all I really want to go into. Let's get back over to the slides. Again, on the slides, as I said, it was all no trades based on that first 5-minute candle. There was some other little things, some next best play there, but based on the way I was trading, based on what I had already on in the market, I wasn't even looking at next best plays. Really, I was in the market, added a couple more positions based on what I already had, And that's the way I ended up playing the market this week. As I say, this is my weekly trade review, December 16th, 2017, for the week of December 11th through December 15th. You can contact me directly at Solomon@rightside trading.com if you would like to learn more about the things we do here at Right Side Trading. Visit our website. I'll be posting this out here on my YouTube page. And I'll also look for us, visit the webpage. We got some things coming up in Orlando in February. I should be in Orlando in February. I'm looking to do that. I hope everything stays in line where I will be able to do that. So look forward to that. Other than that, have a great weekend and have a great week trading next week. Again, thank you for viewing and enjoy. Like I say, enjoy your weekend. Bye.